Hey, good morning everybody. Today is Friday, June 10th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning, as we always do, with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HDSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 14 came from the precious metals industry. That's a lot. We also had 14 real estate investment trusts, 8 from the medical device industry, 6 from integrated utilities, and rounding out the top 5, we had packaged foods with 6 stocks in the 100 most powerful stocks in the most powerful industry groups. We've been seeing quite a bit of packaged foods recently. We've been seeing quite a bit of medical devices. Real estate investment trust and precious metal mining have also been very strong recently. These may be good places to look for leadership in this market. Let's begin today by taking a look at the Russell 2000. As you know, I've been saying for quite a while that the Russell appears to be the key to the market going forward. Notice how we took out this level of resistance, which was the high that the Russell put in back in the end of April, beginning of May. We seem to have established this short-term uptrend, and yesterday we pulled back to that level. Notice how we found support at this uptrend. We want to see the Russell hold this trend line. Right now the Russell is bracketed by support down here in the 1156 area, and we have significant resistance up here in the 1205 range. Meanwhile, we're watching this trend line. See what the NASDAQ Composite's up to. But before we do that, stocks traded lower but finished at their highest levels of the day yesterday. Trading volume was lower than Wednesday's levels, indicating a lack of conviction on the part of the bears. Yesterday we wrote, the NASDAQ has kind of tentatively bettered its April 19th high in the 49.69 area, but doesn't appear ready to hold that level yet. The NASDAQ dropped below that area of support again yesterday, or put another way, appears to have failed at that level of resistance. Meanwhile, the S&P 500 also balked at significant resistance at its November 2015 high in the 2116 area. Distribution or professional selling has been all but non-existent over the past 2 weeks. Currently, both the NASDAQ and the S&P have only 3 distribution days in the past month, and we've not added a distribution day in well over 2 weeks, although Investors.com awarded the S&P a stalling day earlier this week. Stalling is a form of distribution that requires an index to close higher, but at the bottom of its daily trading range on heavier trading volume. Unless it's egregious, we don't generally track stalling days. All that noted, the Investors.com market outlook is indicating a confirmed uptrend in the market. Meanwhile, our market timing model transitioned from our most aggressive buy rating, a margin signal, to just a plain old buy signal yesterday. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Thursday, advancing issues trailed decliners by a little better than 3-2. New highs continue to handily outperform new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform large caps on a 10-day moving average basis. The bulls prefer to see small caps outperform. Our Ramosi swing timing model is indicating an extremely overbought condition in the market. Keep in mind, an extremely overbought market can become severely overbought. For those following it, our RSI 10 strategy had us selling the last of our long positions yesterday and taking the first position on the contra side. From a market perspective, both the S&P 500 and the NASDAQ appeared to have paused at significant resistance areas. While our distribution count isn't a concern, if the S&P and the NASDAQ are turned away at these levels and we begin to consolidate gains, expect distribution to come into the market. Our market timing model right now is on a buy signal. The market looks like it may need to consolidate gains here. Traders should be as fully invested as they're going to get, and as always, should keep your stops in place and current. Okay, yesterday, the NASDAQ was down 16.02 points or 0.32%. We closed at 49.58. Notice how we appear to have balked at both this area of resistance, but more significantly, at this trend line. This trend line, as we know, goes all the way back to the beginning of the bull market in 2009 and has offered significant resistance to the NASDAQ. We came up, we tested that area of resistance, and we appear to have failed. We've undercut resistance right here in the 49.69 area, and it looks as if maybe the NASDAQ needs to consolidate a little bit here. Trading volume yesterday was light. That's kind of what the bulls would want to see. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February, and we have only 3 distribution days in the past month. That's a very low distribution count. We haven't seen any distribution in the NASDAQ in well over 2 weeks. Right now, our market timing model on the NASDAQ is indicating a buy signal. A buy signal, as we mentioned, indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. NASDAQ appears to be bracketed by resistance in the 46.69 area and support in the 4900 range. That's a very tight trading range. We'll see which direction we want to break out. In the meantime, let's take a look at the S&P 500. S&P yesterday was down 3.64 points or 0.17%. We closed at 2115, just below this resistance level in the 2116 area. Trading volume was light on the sell-off yesterday, which is what the bulls would want to see, and well below average. We are in a confirmed uptrend on the S&P 500 and have been since February. We have 3 distribution days on the S&P. Again, that's very light distribution, and the S&P also hasn't seen a distribution day in over a week. I'm sorry, in over 2 weeks. Right now, the S&P seems to be bracketed by support down here in the 2044 area and significant resistance up here in the 2116 range. We also have the 50-day moving average, which also should add a level of support if the S&P breaks down here at this resistance level. Our market timing model on the S&P is on a buy signal. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.